this is one of the interesting topics every traders have been longing to see on this channel. So today's video, I'm going to talk about entry model, and as you already know, how I take my entries on the lower time frame and also on the higher time frame. The reason why most traders fail is not because they are wrong, it's because they just enter the trade at the wrong time. So today there's going to be a shift in that, and I'm also going to show you guys how to analyze my trade on the higher time frame and then to the lower time frame, and then take my entries in the lower time frame. So if you have been battling and also struggling on how you can get entries on the right time frame and enter the trade at the right time, today's video is going to make you understand that there are reasons why you shouldn't be taking your trades anytime or enter trades too early. So after watching this video, make sure you share with your friends and also leave a comment in the comment section on the next topic you want to see on this channel. There's a link in the description box, so you can click that to join my free Telegram community, where I usually send out my charts, what I'm looking out for the week, and also the trades I take, I share them for free. So all you have to do is watch this video to the end and then make sure you like and subscribe. See you guys on the chart.
I want you guys to understand that we have different types of entry model, and there are a whole lot of them. So it all depends on what you prefer to trade. As for me, I have 3 types of entry model. So the 3 types of entry model I have is this: engineered liquidity entry model, right? I have reclaimed block entry model. I have sweep entry model. But in this video, we are going to discuss on this engineered liquidity entry model, which it is an A+ setup, right? An A+ setup, which means if all the criteria meets, that means that that trade is very much valid and has 80 to 90 probability for it to go your way, right? So we are going to talk about engineered liquidity entry model. So engineered liquidity entry model is something that if market is in a downtrend, we want to see, first of all, we want to see a sweep, right? And we want to see what? A break. Then we want to see price engineered liquidity push, and this is the liquidity. So price comes back and mitigates this other block, and then boom, this should be your target. So this is the entry model we are going to talk about today, and also I'm going to show you guys example of trades that I've used this entry model to take on gold last week. So first of all, we have to identify what the market structure. We have to read market structure to understand what the structure is doing. So we also have to identify what the trend of that pair. Then after that, we look for where our break of structure is. We look for BOS, right? We look for an inducement. Does it have an inducement? We also look for order block. You can call it order block or a demand zone, right? For us to take. So all these things must come in play before you consider that trade a valid one, right? So now let's go to the charts. So this is a trade I took on gold. Right, you can see the market. Let's go to 1 hour. So this is the trade I took on gold. That was last week, right? I did analysis on the higher time frame and all the way down to lower time frame to get this confirmation. So first of all, I'm going to clear off this chart, and then we'll do show you guys how I arrived at these trades, right? So we are going to be doing back testing together, and then I'm going to show you guys how I usually analyze the charts and then how I come about these trades, right? So I'm going to clear everything off, and going to go to the weekly time frame. So here on the weekly time frame, we can see that the market has been bearish, right? bullish, right? You can see that gold is very much bullish. So since gold is bullish, we should only be looking for what buys, and then which means following the trend. And also, if you understand how to read structure very well, then you can trade the pullback, which is the sells. So now, since we already know that the market is in an uptrending market, the market is an uptrending market, all we have to look for is for buy setup. Except when you scale down to the lower time frame, then you understand, okay, if the market is bearish or not. So first of all, you have to understand structure, right? You must understand structure. So for you to understand structure, we usually see that the market always make a push, which is an impulsive move, a pullback, an impulsive move, a pullback, an impulsive move, which all these high, new high, this price created a new high, going above the previous high, as you can see, so which means a break of structure. So we're still maintaining this high until we do what? Until price failed to break above the previous high, and then we can consider this a shift, right? So once we have this as a shift, I usually wait for the second one before I consider what a proper shift. So in this case, we have two shifts. So we can see the market was moving up, and then it later failed this high, this low failed to create a new high. So what happened? It broke structure. This is a shift, right? And after the shift, price went back up again. Price went back up. After the shift, price went back up and came back down again, gave us a second shift. So these are two shifts. First shift and then break of structure, which is BUS, right? So once I see something like this, I know that the market is about to go bearish. So when the market is about to go bearish, all this becomes what? Liquidity that the market is going to take. So those that have their buy stop, and also those that have their stop losses below this point, price will definitely take all of them out, right? So now, after a shift in market structure, we should be looking forward, should be waiting for price to return to mitigate this zone. So in this case, let's say if this was not mitigated, right, price will definitely come to mitigate all of them before going bearish, right? So whenever we see something like this, this is an inducement, right? This is an inducement, and also this is an inducement. So this is going to be a valid inducement only if price has not mitigated these supply zones. But if price has already mitigated the supply zones here, something, let's say we had something like this, a mitigated zone. A mitigated zone is likely not going to hold, except it is not mitigated, right? So if the supply zone has already been mitigated, then if price should come back to that area, it simply means that the market is going, the price is going to break above that supply zone. Do you understand? Price is going to break above the supply zone. So you only trade when the market or price has not yet mitigated that supply zone. That is when it is a valid supply zone. So let's say example, so after this break of structure here, price came back here, right? And engineered liquidity, which is can say inducement, and then comes back and mitigates it. So the reason why most traders always, maybe you didn't know that this is an inducement, you now take a trade here, is because this low, this lower high did not break structure. That is why it is not a valid odd supply zone. So it would have been valid if there was a break of structure again to the downside. But since it failed to break structure, that is why price used this as liquidity, tap into our POI and then drop. So this would have been my target. So this is the reason why most traders take entry at the wrong place, and then you get stopped out. Then the next thing, market go to your TP. So you have to always consider this. And in this case, this is an A plus setup, which if we go on the chart, you'll see that we usually have this, a sweep, a break, an inducement, this, price comes back, mitigates, and then drops. So this is the entry model I want you guys to learn today. So this is a sweep, and this is what? A break, and this is what? An inducement, which is engineered liquidity, and price it what? Taps into our POI. So in this case, this is a bearish structure. So you can target this level as your what? TP. So this is an A plus setup. So if you leverage this on your profile account, you should at least make 1:4, which is 4% of your account. If you are risking 1%, you should be making 4%. So this is, so if you reduce your stop loss just to this high, then you should be making 1:5. So if you understand this, right, that if market is moving in an uptrending market and then turns bearish, when to consider that the market has changed trend is only when we have the first shift and then a break of structure, and then unmitigated supply should be there and this one should be there before it is a valid one. So now let me take all of this out. So now what we want to do is to analyze this chart. So I'm going to take my time to make sure that this is a proper top-down analysis to help you understand the trend of the market and also know what the market is doing before taking your trades. So we can see this is the higher time frame, and this is weekly what? This is weekly demand zone, and this is weekly what? This is weekly supply zone. So now you should always make sure that for it to be valid, there should be what? A sweep, and what? A break, and what? Inducement, price push down, take that demand zone, and then drops, right? So now, once you understand this structure, it will be very, very easy for you to know what the market is doing. So how I arrived at those trades that I took on gold, I first of all marked this level as my key level on the weekly time frame. Now, when I marked this level as a key level on the weekly time frame, price was somewhere around this area. Now, if you want to verify this, I also dropped this chart on my Telegram channel. So if you are not on my Telegram channel, make sure you check the link in the description to join my Telegram channel. I do share setup, I share free signals sometimes, I do share anything I see in the market, I share them. So my free members always take advantage of my charts, right? So I marked this level. So once I marked this level, I went down to daily time frame. So on the daily time frame, I now understand that the market did what? It gave us what? There was a sweep here. There was a sweep here on the daily time frame, and there was also what? A break here, right? So looking at the upside as well, there is also what? A sweep here, right? Which is the reason why this supply zone was valid, that pushed price down here, and also because of this sweep and a break here, it means also that price also tap into this demand zone, because these two levels are valid levels on the daily time frame. Why are they valid? There was a sweep here, and there was also what, a sweep here. So you must also always factor this into your analysis, either on the daily time frame. Was there a sweep to make this level a key one, or was there a sweep to make this level, this demand zone, a key one? So you can see how price respected this on the daily time frame, pushed it down to the weekly demand, and then price now heading back up here. So I believe as price is coming back up here, price is going to take this high and then give us what, a break of structure, making price to maybe retrace price back down here to keep going to the upside. So now when I saw this on the daily time frame, I knew that this was a valid demand zone for gold. Now I went down to 4-hour time frame. So at this point, I'm going to cut my chart so we can do this together, right? So we will look at this level here. So this is 4-hour time frame now. All right, so now remember I marked this level on the weekly time frame, so expecting price to come into any of these levels for me to take my trades. So now you'll be doing this together. So you can see that price taps into this level. So immediately price taps into this level, all I have to do is I go to 15 minutes time frame. Now what am I looking on the 15 minutes time frame? I'm looking at a shift in market structure. I think this was too fast. So okay, so now immediately price taps into this, our demand zone. All I did was to watch out for change of character for me to confirm my entry. So all I did was I first of all marked this level as a high, and then I waited for price to see. I want to see a sweep, because in as much as we had a sweep on the daily time frame, we also want to see a sweep and break here before taking any trade. So remember, price is in the supply zone. Okay, so this is a sweep, right? Now you must understand that this high is a sweep. Now, because there is no body close above, that is why it is a sweep. Now, at this point here, I will mark this as my low, right? So I want to see price break this low. Remember, this is it. Let's do this way. So this is it. A sweep, a break. So we want to see these three rules. First is sweep, second is break, third one is what? And inducement, which is an engineered liquidity, and then pull back down, fail to break this. Price comes back here, tap into the demand supply zone, and then drop. So this is what we are going to be looking for. So I'm drawing it so that you can understand. This is a sweep. This is what? A break. This is our what? Target. Then this is what? Inducement. So this is what we are going to be looking out for. All right, so now we have sweep and we have our last higher low. So without price to break below this level, this trade is not going to be valid. So you want to see price break and close below this level for it to be valid. For it not to break, if it failed to break and then do something like this, then it means that price is still going to come back here and take this high. So we want to see price take that low. So let's continue. Okay, so now we have a break and close. So I will now say, okay, do we have a supply? Can say, okay, yeah, we have a supply here, right? The reason why I'm picking this level as my supply is because this is the last up candle before this bearish, right? So let's see. Now, remember, we don't have inducements yet, but if you consider this as an inducement, maybe it will work. Let's see. Okay, price now taps. Since price already gave what? A break and close below. So I would use this as my inducement. So I will take my entry here now and have my stop loss just here. This, and then my target is going to be, remember, this is weekly what? Weekly supply zone. So this market has possibility of coming all the way down to this level, but I don't want to be greedy. There are traders who normally see 1 to 3 and then all of a sudden market goes back up, hits their stop loss or take them out at break even. Now I usually tell my students, if you're targeting if you have a risk to reward, make sure that it is a fixed risk to reward, either 1:3, right, or 1:5 is okay. Even sometimes I usually go for 1:4. But in this case, let's use structure as our take profit. So we are going to use this structure as our take profit, which is 1:, yeah, we can say, because this is a liquidity, price definitely going to take it out. So 1:4 is enough. So let's see. So we had what? We had another break here. You can see there was another break. So immediately price broke structure here. It tapped into this open close candle. Tapped into this open close candle in the lower time frame and then dropped. So if I wanted to take another entry, I would have taken another entry and have my stop loss just above that level and then still target this same low. So you can see how price came, hit our target, and then what? Push back up. So in this case now, since we already know that the market is bearish, right, that there's possibility of price coming back down here or down to this level, right? There's possibility of price coming down to this level. So if we are trading the higher time frame, we could possibly look for price to target this low. So now let's go back to 15 minutes time frame. So now we want to confirm that the market is bearish now because market is coming from a higher time frame point of interest, which is a supply zone, the weekly and the daily time frame. Remember, I showed you guys how I got this weekly demand and also weekly supply. So on the 1 hour time frame, let's look at the 1 hour time frame. We should be having a break of structure. Now, for us to confirm a break of structure on the 1 hour time frame, we want to see price close below this last higher low. Remember, I said that we want to see price, if price is bullish, right, breaking structures to the upside, we want to see first, okay, let's say price is trading to the upside. So this way now, we want to see a shift, which is the first break. So once we have first break does not really signify that the market has completely changed trend. Sometimes it comes down here to grab liquidity, to sweep, right? It comes down to sweep. I've talked about difference between sweep and break. So sometimes market can do something like this and then keeps pushing back up. right? So that is why it is always good to have at least two break of structure, first shift and then two break, before you consider that the market is going to drop. So we can say, okay, this is a sweep, and then you can see what price came back up, take that high, and then come back, break structure, push back up, break structure again. So in this case now, we can consider that the market is changing trend and start looking forward sales. So this is our last higher low. This is our last higher low. So now in this case, this is our last higher low on the 1 hour time frame, because it is this high, it is this low that created this high, this low that created this high. So now we want to see price break and close a candle close below this level for us to confirm that price is going bearish. So let's keep on playing. So now we are going to stay on the 1 hour time frame. Okay, so now we now have a break below this level. So we are going to look for more entries to sell to the downside, since we already confirmed that this is now bearish structure. So we can say, okay, this level here. So let's see if price will come back to this level. But if it doesn't, fine. We can also consider this as our. So now remember I said that we must always have what? A sweep, right? So we are using this model to take entries. So we must always have what? A shift, a sweep. But looking at here, there is no shift, there is no sweep. So the structure is not really that clear. You can see how price pushing back up. Market keeps going down. There is no structure. Remember, don't rush any trade. You already got 1:4 here, so there is no need to rush. So you can see how price dropped aggressively to the downside. So now price gave us what? Another break of structure and another break of structure. So this trade, I also looked at this trade. So when I saw this huge drop, this is open close candle, right? And this is what? A supply. This is a valid supply. Now, seeing something like this, I know very well that if price should trade into this level, that there is going to be another drop. So sometimes if we see a massive drop like this, creating imbalance, price don't usually feel it immediately. It can feel either 50% of it, and then you see another drop, right? So when I saw this huge drop, it gave me confirmation that price is coming to this weekly demand zone. So let's keep playing. Yeah, let's go to 15 minutes time frame now. Now see how price is going to trade into this level. Very slow and choppy. Now, if you try to sell at this point, price is not going to sell. Also, that's why I said you have to consider structure, right? This, price is now breaking structure to the upside. I don't want this video to be too long. So price is respecting that demand, right? So there's no need to buy. Remember, we want to sell. So forget about what you're seeing there. Now price taps into this area here, this open close. So now we want to also look for a confirmation. We are not just going to take the trade like that. We want to look for confirmation again, which is that sweep. Price still respecting demand. So now there is a sweep here. So we want to see a break below this level. But if I don't see a break, since I already marked this level as my POI, I'm going to take the trade. Price is still playing around. So now price is trading inside our point of interest. So I would take this trade right here. There was a sweep. I'm going to take this trade. This is an open close candle here, right? I'm going to take this trade and have my stop loss above this level here. All right, so now remember I said a sweep. So you can say this is a sweep, right? Sweep, another sweep here. So you can say this be a break of structure. This is a sweep actually, but since price is in our key level supply zone, we want to take this sell. So we could possibly take this sell around this. We would have entered this trade around this level and then have our stop loss here. So now this is going to be our liquidity. Price is going to take it. So we are going to target below this low. That's 1:3. All right. So I took this trade. So price tap into that. So you can see price hit our target. So the next trade I took was I waited for price to return. You can see the aggressive move to this downside. I marked this level, so there was no need for me to wait for any inducement again or any sort of stuff. I know that price is going down, so I took entry here and I target this low. That's 1:3. My stop loss was very, very tight though. I did 1:3 here. So you can see I'm following structure, not going against. You can see how it hits the target. Now price is here. I'm not going to be looking for any sell entry anymore. What I want to look out for is buys. So in this case, we are going to look at the same thing. Price is trading downward. So we want to see what a sweep, a break, an inducement, price push up, come back, and then boom. So this is what we want to see, the same thing. So now in this case, this is our last higher, lower high. So price pushed up, and then did what? It gave us what? A break of structure. Now, a lot of people sold at this point, but I was more interested in the buys since there is a break of structure. Now, price started dropping, break of structure, and I marked this, I think it was this area here that I marked since this is demand zone. So price, this is demand zone. This is an inducement, right? So let's watch. Though I took a sell from this point down to this level, right? I took a sell from here, but I'm not going to put it here because I did not meet all my comp. It was just a risky this thing, since I was more focused on the buys. So, and the NFP took price to the upside. So I waited for price to tap in here. Boom. Price taps in here and have my stop loss here. So this was where I got that good NFP move. You can say this was where I got the trade and this was my target. You can go and confirm this trade on my Telegram. I sent it to my Telegram. before this played out. So go and confirm that. So this is how I usually trade, right? This is a break of structure and inducement, demand zone. I took the entry. So I'm going to be doing more of these videos like this. So see you guys in another video, and make sure you drop them a comment below on the next video you want to see, or want to have see on my channel, or you want me to do, so I can do it for you guys. So thank you, and share this video. Make sure you like and comment. See you guys.